cost for a building is dramatically different post-pandemic than it was pre-pandemic. Even in the last 10 years, we've seen costs be a continual rise related to inflation, related to now we're talking about tariffs, and not only the cost of materials, but also the labor cost. And a lot of people don't think about that when you're talking about replacement value, but you're talking about the cost of paying those people to, put all that back together. And even state laws have changed where minimum wage is much higher than it used to be. Deductibles are changing. How much is the insurance company comfortable with taking on their side, but how much are we comfortable with taking on the school side? And does it make sense to have a really low deductible, or does it really make sense to have a deductible that's maybe 10, 15, 25 and even up, because financially that makes sense for the school, and then obviously it helps mitigate cost for the insurance company.
There's a lot going on with deductibles in the marketplace, and it's tied into some larger trends which have to do with looking at weather patterns. Can you talk at all about what insurance companies are seeing in change of weather patterns here on the Eastern Coast and how it's making them think differently about what they're willing to offer in terms of insurance?
I think we could look at it on the East Coast, but I think we have to look at the bigger picture. I think we have to look at it from a national perspective. I mean, let's go back to the deep freeze in Texas. Insurance companies weren't prepared for that to happen from a standpoint of loss, because nobody expected the temperatures to be that cold in Texas, quite frankly. And so, those are things we've seen. Numerous tornadoes in, I would say, the eastern side of the Mississippi over the last 5 to 8 years. Those impact insurance costs everywhere up and down the coast, coast to coast, east to west. And so those are happening more often. We've seen a lot of hurricanes, but we've not had a major hurricane on the East Coast. And so that's a good thing. But we've also seen a lot of flooding. I mean, let's talk about the hurricane that came up through the eastern seaboard and ended up in the mountains of North Carolina, and how that impacts, is still impacting and is going to impact people for a long time. And it impacts insurance costs as well. We are seeing changing weather patterns, and that is affecting claims and how high those claims go. And obviously factor that in with, the cost of rebuilding things today. That is making an impact on the premiums.
When you're talking to a school, how do you help them make sense of what type of deductible makes sense for them?
We get into building costs, and some people say, I got a $10 million building and I only want $1,000 deductible. Well, is that absolutely realistic in the idea that you're going to take on $1,000? And what does that look like to the insurance company, right? So financially, it has to make sense. And so let's take a look at the numbers on your side from a financial standpoint, both in operating capital and in savings, to say, could we take on 10,000 or 25,000? Could that be a possibility for us? We've not had a history of claims, so why are we sitting at $1,000 deductible when we could take on more risk over a period of time and lower our insurance cost?
And do you have a feel on the type of return on investment that people can experience by taking on higher deductibles? What are you typically looking for in a cost savings for it to make sense for the customer to make that kind of move?
One thing we need to be educated about, or think through the education side of it, is, yes, you're doubling your deductible, maybe tripling your deductible in some cases. And the return on investment is going to be good from a reduction in premium. But a lot of people think, well, I'm doubling my deductible, I need to lower my premium by half. And that's just not reality of the way it operates. And I have an example. I have a client who had a $2,500 deductible, not a client, a prospect who had a $2,500 deductible, and picked up the phone and called me and said, look, we can afford the premium. My concern is the company we're with just moved our deductible from $2,500 to $25,000. And that's a dramatic increase. That's a dramatic change. And it's unaffordable for them. So we had to have that conversation about what is affordable and what does that look like for your budget. And I think we ended up at a $5,000 deductible, which is much more comfortable for them. It even doubled what they were at previously, but it certainly wasn't out of line with what that company was doing, which had gone all the way to 25,000.